It's a long way from Mexico, but this is where Guzman y Gomez first opened a restaurant in Sydney 18 years ago.
No added preservatives, no artificial flavors, no added colors.
The Mexican-inspired company has since become the fastest growing fast food chain in Australia.
They're pretty good and convenient, and I find they're pretty cheap.
I like the taste, and it's healthy as well.
On a mission to reinvent fast food, the firm has 185 restaurants around the country and another 25 scattered between Singapore, Japan and the US. Now it's gearing up to become a publicly listed company on the Australian Securities Exchange on June 20.
For investors, it's actually really interesting because we don't have too many high growth sort of food business here in Australia. We have a few of them, you know, the likes of Domino's and others, but they have all gone overseas because their home market, Australia, is already mature. So it is actually quite interesting and refreshing to see something that's growing so fast within our homeland.
No strangers to a challenge. The business was founded by Americans Steve Marks and Robert Hazan, who had high-flying corporate careers before they turned to fast food. Marks worked on Wall Street as a hedge fund manager, and Hazan had a retail and fashion wholesaling background. While Hazan has stepped back from the firm, the duo haven't been shy about their ambitions. They want the food chain to become as big as McDonald's.
It's talking about growing that to about 1,000 stores over the next 10 to 20 years. So ambitious expansion plans, and they need a deep pool of capital to be able to realise that.
To fund its expansion plans, 11.1 million shares will be offered at $22 each, raising more than $240 million. That gives the company a valuation of $2.2 billion, more than 4 times the value of Maya.
So you're looking at a price to earnings ratio around about 37, 38 times earnings, which does seem very high by the standards of many companies already listed on the market, but it does have high growth expectations.
If you compare to a high growth one in other market, like in the US market, it's actually not too bad.
Being a public company is a gamble, but it's a risk its current investors, including TDM, Barrenjoey and Aware Super, are willing to take.
Because of the demand is so strong, this IPO is being anchored by many large institutional investors.
Last financial year, the company made a loss of $2.3 million and is expected to lose more than $14 million this financial year before turning things around. It aims to open around 30 more restaurants in Australia in 2024 alone. It's ambitious, sure, but GYG would argue that's how it got to where it is today.
GYG is now selling its story to fund managers around the country, with Wavestone Capital's portfolio director Catherine Allfrey among them. I spoke to her earlier. Hi Catherine, what do you make of the GYG pitch and whether the underwriters have come up with a fair valuation?
I actually think the company is really quite remarkable, and they've grown substantially over the last few years. Founder-led company. Stephen Marks has done an amazing job here in Australia and just, quite nascent offshore, and there's a lot of opportunity offshore. I think the product really resonates with, mums and dads out there. So the question is really, what's it worth? So they're coming to the market with a $2.2 billion market capitalisation. Very hard to put it on any sort of multiple because they're forecasting only a profit of $6 million for 2025 because they're in this hyper growth mode. They're rolling out 30 or 40 stores per annum. They've got something like 180 here in Australia, and their plan is to grow substantially. McDonald's in Australia is something like 1,000 stores, so that's what they see as their white space, that they can go somewhere from 180 stores here up to towards 1,000 stores. The biggest question in my mind is can they find the sites to do that store rollout? But I think it's going to be interesting. There's not much stock on offer at all. It's sort of like a club deal. So I'll be watching it with interest, waiting for it maybe to have a bit of a falter at some point. You never know if there's a pandemic or, an economic recession around the corner that may provide that opportunity to get into GYG.
And so the high price to earnings ratio, can it be explained at the moment by the growth potential, the high growth story GYG is selling?
Yes, exactly. So the question is how many years of growth before that multiple is justified. And so if there's $430 million of sales today, you look at the EBITDA multiple it's going to come to the market on at 32 times. And then, like I said, I think there's $6 million of profit forecast for the next 12 months, which puts it on a PE of like 370 times. So if the market's trading on 17 times, that's a hell of a lot of growth the company needs to achieve over the next decade. Now, he's done it in the last decade, so let's watch and see if he can do it, and then we'll look at backing him.
You've been in the room with management in just the past day. Why is the company looking to list now?
I think for a few reasons. They've had a private equity firm, TDM Capital, on their register since 2018, and they've provided obviously a lot of the capital to grow the business over the last 6 years. And so they are doing a slight sell down of their shareholding, and private equity, it's the cycle of capital, right? They're always looking for the new opportunity. And so putting the business on the market provides them an opportunity to be able to sell down their sort of 30% shareholding. There are also other shareholders on that register that are taking up new shares in this offer. But also, I think, once it's listed, it will provide the opportunity for GYG, if required, to do further equity raisings.
There hasn't been a lot of IPO action on the ASX of late. Could we be about to see some other companies go public?
Absolutely. The market is up nearly 15% since the October low. The multiples have all been re-rated. I think there's more of an appetite to look at new companies in the Australian stock market, as long as they're not priced for perfection, and there's some opportunity for buyers to get some upside from those IPOs, then they'll be well supported.
Which ones do you expect to see in the near future? The big question mark, of course, remains over Virgin.
Yeah, last few days will be interesting. I mean, Virgin are in the middle of a changeover with their CEO, so that's never a good time to list. They also obviously in talks with Qatar Airlines, so they're looking at taking some sort of stake, and so the question is, will Bain sell down part of its holding to Qatar Airways? So it's really questionable as to whether they would come right now when they don't have, their new CEO in the seat.
Catherine Allfrey, thank you.
You're most welcome.